Good morning, ladies and gentlemen. Boy, what an interesting day in the market it was yesterday. Is this the death nail for the bulls, or are the bears getting ahead of themselves like they historically have done in the past couple times? I think this time is a little bit different, and I'm going to show you guys why I believe that we're another 5-10% down to go. And again, as the thumbnail indicates, you're here, next target here, so you can kind of figure out my skew on where I think we're going. And I'm going to make this as simple as possible for everyone out there for the too long didn't read version. If you guys just want to watch the first minute and a half, and I wouldn't mind if you guys throw a like if you find this interesting. So here's the part for you. You are below the 50. You got a perfect. I mean, you couldn't play this out more perfectly if you were a bear. You opened at the 50, peaked above it for a nanosecond, and I'm actually going to go into the day for you guys, go into regular trading hours, but you can see open, sell off, push back up, get secondary rejection, slam it back down into the close. Props to you, bears out there. You actually managed to put a really big, nice lead on the scoreboard, where this was the Finch downgrade over here, guys, where we basically got the downgrade and been selling off, broke through the 50. I said that was strike number one for the bulls. I said you basically need to recover. They filled these gaps. That's kind of good for the bears, so 1 point for there, along with breaking the 50 with momentum. That's 2 points there. Bulls did find the bounce. However, to me, this is strike number 2. And strike number 3 is breaking the green line. 433 on S&P. You break that, well, your 200-day moving average is the next target, and we're finally going to get the spiel I've been talking about, which is fill this gap and fill this gap. I'm going to be really happy when those gaps get filled. You guys know me on the channel, I think, and subscribe to the philosophy that all gaps get filled in time. Even the COVID one that's all the way down there, I do think we're coming for that one sooner than you think. But before I digress, if we bounce at 433 and Jerome Powell's the catalyst, I would not be surprised if the 50 DMA gets broken back up, holds, and we push up higher. Now, here's for the bulls out there, here's what your scenario could be. This could be an interesting A to B pattern that's very small on the way up, projecting basically up to that 449 level. So again, just be cautious about that, which would break you above the weekly range. Not super strong, but it gets you back above there. But if you are a bear in this camp, then you could find basically this being an A to B pattern on the way down, ironically completing around 418.79, which is a completion of a gap fill. Kind of ironic, guys, right? But, you know, let's take a look at NASDAQ. Let's see what NASDAQ is telling us, if it's telling us the same thing. And NASDAQ actually has one of the worst stories. You significantly opened up above the 50-day moving average, and now you're coming for that trend line test. You bounced on this trend line before, and let's just go back to establish where this trend line came from. This came from our March push, secondary retest in April, and now third retest that you kind of weakened around it in last week. Now you've broken the weekly range, so it's now a failed breakout. So strike number 2 for you dang bulls out there. And you're heading towards that trend line. If you don't bounce out of that trend line, I don't think 354.71 holds whatsoever. I think you send right through it. And if I am just simply preaching about price and volume that I always do on this channel, I basically talk about price and volume are your two things. I'm seeing massive bearish volume on the chart. That's dominating. There is no bullish volume that is out exceeding the bears. The bears are showing up with volume on days, pushing you down lower. And if you just look at the chart, there's more red than green. So it is the proverbial bears in control. Bulls are on the defense, which flip the narrative. And I did say this is weird because the net speculative positions that everyone kind of has been pointing to, they're basically capitulating out, but the bears are winning. It's a very peculiar thing. It could be forced selling, it could be margin calls, it could be a multitude of different things, or it could simply be that people are just chasing yield. And what do I mean by that? Well, if we go to the 10-year, 10 years 4.24, pulling back right now, looking like it wants to make a secondary run. But if we go to some of the shorter term yields, 5.34% on a 6-month. Why on earth would I chase the S&P yield that historically is now exceeding what it normally averages? And or I can get 5.34% to the end of the year and guarantee my risk. Well, I think I'm going for the guaranteed risk here versus the S&P's historical performance. And on top of it, we can look at XLF. XLF is the financial sector ETF. I basically had this line back here drawn, but I'm going to delete it. You're in the kangaroo right now. Solid rejection off the 50-day. Broke the 200. Down we go. Probably coming back down to this trend line here to find support around maybe the 50 weekly. If you don't, trend line's probably going to break completely. And my favorite carry, let's see, we reject off the 50, rotating down lower. It's like there's a common trend here, guys, that's showing up on the chart. I couldn't exactly put my finger on what it is, besides we're probably going to get slapped in the face very, very soon if you're a bull. And I don't think Jerome Powell is going to give you the speech that everyone is expecting. But before we dive into Powell, there's one last topic I want to talk about. And that is mixed stinky right here. NVIDIA, sorry. But if we look, NVIDIA almost has what I call the middle finger pattern, where you have your knuckle, the big nice middle finger and your knuckle gonna be here, or the proverbial head and shoulders pattern that's forming. Left shoulder, head, come back to trend line, bounce, let's say reject around the 170 area and break. That's what I suspect. Or NVIDIA could surprise me and just absolutely break this trend line completely, and well, then we're going to start our parabolic correction. Now, mind you, if this is a parabolic correction, price target for NVIDIA would be, based on this being the high, 70% correction to 17 and 67 cents, close again to that 200 weekly like we covered in the live stream yesterday. So why do I find this interesting, and why do I think one of these analysts finally had two brain cells to rub together? You guys know my opinion about analysts. They're wrong 90% of the time, because everyone says Lumen's going to $20 or something, or FRC going to upside of $14 or $15. Well, FRC is broken, and my favorite company in the world, where are we here? Lumen, another haircut for you today, $1.50, and just keeps getting better. But price target of $10 for all these big hedge fund managers and everything. But NVIDIA, going back to it real quick, we have Dean Evaluation. I'm not going to try to butcher his name. I have a weird name, so I'm not even going to do his. Like that says, NVIDIA stock is overvalued even considering its bright prospects. Kind of like what we covered yesterday, where their very bright future, however, their share price is not justifying what they're doing. It's just pretty simple as that. NVIDIA's stellar stock rally has been the highlight of the year's equity market. Boy, is that an understatement. And NVIDIA's stellar 178 stock surge has been the highlight of the US equities. But even a tenfold jump in revenues and operation margins approaches 40% over the next decade would translate into a share price of only $240, well below the current market level of $410, according to NYU financial professor Ashwant. And I'm not going to try to say his last name. Dean Evaluation. So this is someone that's pretty much educated. This is a person that's seen history, studied history. Again, history doesn't repeat itself, it rhymes. And why do I mean rhymes? Well, look what happened last time. The video went parabolic, crapped itself. Parabolic, well, more parabolic, I guess, and bigger crap. So again, or less of crap. I really don't know, but I don't see this trend line holding. I don't see this parabolicness holding. And this is not a good sign right here when you get this massive spike. And you know what the sad part is about NVIDIA? Is that it didn't even close a tick up. Like, there's no wick on this candle. Like, it just said sell into close. Like, there was no mercy whatsoever today on NVIDIA. Like, if we look at a 5-minute chart right here, so you guys can see, there was maybe, that was short covering right here. We're getting closer to a gap fill. That's tradition to see it bounce like that. But you closed at the closing low of the day. So that is not good. Neither did AMD. Have no sympathy whatsoever if we look at AMD. Probably coming back to these moving averages like we talked about. And our good friend Intel sympathized with NVIDIA and AMD and decided to sell off 4% as well. So you know what they say, chips lead tech, tech leads SPY. Well, chips are leading you right off the wrenching abyss. So where do you think the rest of the market is going to go? Well, again, 200 moving day average, 200 day moving average. Oh, did I say 200 day moving average? For the NASDAQ, your target's basically 315. I'm saying somewhere in between these two moving averages. and S&P basically 405, 406, 408 is where I'd be looking. I'm not going to be looking for any bullish momentum unless Powell catalyzes it tomorrow, or basically today when you guys are watching it, with the synopsis. Let's see what he says. We will be covering that in the weekend deep dive, so if you guys would not mind hitting the like button, it really helps the YouTube algorithm, and I hope to see you during that weekend deep dive. We do find that to be our most valuable content for you guys, and it's segmented so you guys can see whatever part you want to see. If you want to see the debate only, you can see that. You can, if you want to see key analysis, then you can go to that, news, whatever. We cater it to you. If you have any recommendations of how we can improve it or any of our videos, throw it down in the comments section below, and I will leave you with this. Throw one in the comments section down below if you think this head and shoulders is going to play out, or two, that Powell is going to come in and invalidate that today. I'm really curious to see your thoughts, and I really appreciate it, guys. I hope to see you tomorrow in the weekend deep dive, and I hope you have a wonderful day.